Let's have a look at the three most fundamental rules of accounting. Rule number one. Debits are recorded on the left-hand side and credits are recorded on the right-hand side in the general ledger. You'll remember that the general ledger looks like this. We've got these T accounts. So my debits will be on the left-hand side and my credits is going to be on the right-hand side. Here's my liabilities and my equity, and debits on the left, credits on the right of my T accounts. That's rule number one. Rule number two. For every debit, there must be a credit. That's the golden rule. This is also known as a double entry principle, which means every transaction, every activity that occurs is always going to affect two accounts. You can have two assets, or you can have an asset and a liability. You can have any combination of accounts affected, but there must always be two accounts affected for every activity that occurs. Rule number three says debt click. Now, what on earth does that mean? That means debt stands for debit, D, expenses, assets, and drawings if they increased. Very important, if they increased. So if my assets or my drawings or my expenses increased, I'm going to record something on the debit side of that account. I'm going to record an amount on the debit side of that account. The second part of this acronym tells us click credit liabilities, incomes, and capitals if they increase. So here's my liabilities, my equity, my capital, and my incomes, and they're going to increase on the credit side. You may be thinking, where on earth did they get this rule from? Now, the guys who invented accounting determined this rule so that your accounting equation, assets will always equal your owner's equity plus your liabilities. If these rules are not followed, then your accounting transactions will not balance. Let's look at an example to illustrate. Mr. ABC applied for a loan from a bank and he was successful. He received 15,000 Rand into his bank account. Good, so we received some money here. So which two accounts are affected? Remember the double entry principle says for every debit there must be a credit. So we need to identify two accounts. A transaction is an exchange of value. So Mr. ABC is receiving money, right? That's what's happening. He's receiving money and he's giving the bank a promise to pay. Right, so those are the two things that's happening. That's the exchange of value that is taking place here. So the accounts affected is going to be bank, and the other account is going to be loan, which we owe to the bank. So now we need to classify these accounts. The bank account is going to be an asset because this is money that the business has. So it's already money and it can be turned into other assets if we so wish. So this is going to be an asset. The liability is something that we owe to the bank. All right, so Mr. ABC owes this money to the bank. So this is going to be a liability. Now we need to see what happened to my asset. Well, pretty obvious. He received 15,000 Rand into his bank account. Is that an increase or a decrease? That's going to be an increase. What happened to the liability? The liability also increased. Why did I say that? Well, Mr. ABC now owes more money to the bank. So because he owes more, the liability increased. Right, that is the trickiest part. Now the last part is just to apply the debt click principle, your basic rules that you should know whenever you wake up. And this is very fundamental. For grade 12 accounting, you shouldn't have a problem with this at all. All right, so an asset increased. So what does my rule say? If assets increased, we need to put a debit. Debit expenses, assets and drawings. So this is going to be a debit. Then we can already know that the next one is going to be a credit because the first rule says for every debit there must be, the second rule, for every debit there must be a credit. So we know this is going to be a credit, but let's just check it. Any case, a liability increased. What does my rule say? Credit liabilities, incomes, and capital. Credit liabilities, incomes, and capital. if they increased. There we go. We put a credit, and that is that. Let's have a look at how this impacts the accounting equation. We received 15,000 Rand into my bank account. So that's going to go on the debit side because my bank increased. Liability also increased. So this is going to go on the credit side of my loan account, 15,000 Rand. And my accounting equation is going to balance. My assets will be 15,000. My liabilities will be 15,000. And it agrees.